We're going to talk about construction of an ADU. We're not so much going to talk about the construction process, but we're going to talk about financing it. If you have a bunch of cash laying around, maybe you don't need this workshop, but for the majority of us, there needs to be some sort of financing in place. So we're going to kind of talk through that and see if we can help you. ADUs have been around for years and years and years. They were called granny flats at one time, mother-in-law units, au pair suites. They were pool houses. They were apartments. They're guest homes. There's a lot of different names for them. But what happened about 2 years ago was the state of California recognized the housing shortage in the state and said, we're going to relax the guidelines on building these things, and maybe it can help with our housing crisis, creating more rental units quickly. Well, that has kind of flooded the market with people that want to do ADUs and also people that build ADUs. The challenge is incredibly fast time of interest rate hikes, where the interest rates went up faster and at the shortest period of time in the history. And that has set them back going, well, I have a 3% interest rate. Does it really make sense for me to refinance and get a construction loan? And my response to that is maybe. I've long maintained in my career that interest rate isn't what you should be looking at in a mortgage. Yes, it's an important fact of a mortgage, but what does that interest rate do for you and not do for you? So we're going to kind of take a look at these things. If you'd like to schedule a one-on-one consultation with us, I'm more than happy to sit and take a half an hour, 45 minutes, and talk through your specific scenario. Types of loans, we're going to discuss home equity lines of credit, referred to as HELOCs, right? Cash out refinance of your home. We have a couple of different products, HomeStyle Renovation, which is a Fannie Mae product designed to help keep people in the neighborhood that you know and love. Remodel, not buy new. There's also 203K loans, been around a long time. There's the FHA version of the HomeStyle Renovation, a little more relaxed guidelines, a little easier to qualify for. If you have a piece of land that you're looking to build a house on, we have something called the one-time close. Private lending is always an option, although it's more expensive. We have a jumbo product that goes all the way up to $3 million. There's stocks, investments, savings accounts. You're going to try and cash it out. And then something that I like for in some scenarios is the aging in place or the reverse mortgage for ADU and renovation of housing. So we'll jump into it. And if you have questions along the way, feel free to ask. Last year, there was a CALHFA grant, which gave people up to $40,000 for what's called soft cost to help them in building these ADUs. The $100 million grant program has been spent. This program is on pause. They did not cancel this program. They paused it. I believe that there'll be some sort of reintroduction of this program at some point this year. We just don't know when and what it's going to look like. The financing options we have, we kind of put it into chart form. Depending on the loan to value you have and your particular situation, you go up and down this grid. We always like to start with cash, with money that you have. We work it from the lesser expensive type loans to the more expensive type loans. With lending, pretty much whether it's a construction loan or a traditional loan or a reverse mortgage or whatever it happens to be, the greater the risk, the greater the reward. Anytime we're asking lenders to stretch, usually you're going to pay a little bit more for something. Okay, so always just keep that in the back of your mind. The Fannie Mae, FHA, Freddie Mac, VA loan limits change on a yearly basis. All the information we're giving you here is effective January 1 of 2023. Just know that about Thanksgiving, Congress announces the new loan limits for each county in the country. And then at New Year's, they go into effect. So just know that they change a little bit from time to time. These are the conventional loan limits. We're in San Diego County right now, and we have a single unit limit of $977,500. And that's for the conventional non-jumbo programs that we're talking about today. If you live in a home, you're adding one ADU, you can take your loan limit up to $1,251,400. Of course, you have to qualify for it, but we're just talking about loan limits right now. If you're going to add multiple ADUs or units, you're going to go to $1,512,000. And if you're at 4 units, you're going to go to $1,879,000. These numbers are very, very important. If you see Riverside County, there is a difference between conventional lending and FHA lending. Every county is a little different. So depending on where you live, we'll have to kind of figure out where you can be. Loan limit in the state of California is the challenge more often than not. It's really important to maybe bring the lender in first before you start spending a lot of time and energy on looking at contractors or going design showrooms or hiring architects or any of that kind of stuff. I would believe a conversation with a qualified lender who understands the construction space would be very valuable. Home equity lines of credit are probably the loan of choice today. Why? Because you can keep your 3% 30-year fixed rate mortgage that you refinanced into 2 years ago, right? Everybody wants to keep that rate. The challenge with home equity lines of credit is, number one, they're harder to qualify for. The lender is in second position, which means if you default on your property, they have to keep the first mortgage up to date to be able to take back your property. So they're going to be a little more rigid in their underwriting guidelines, but they're great loans. The majority of home equity lines of credit are adjustable rate mortgages. You probably have heard over the past 6-8 months that the Federal Reserve has raised interest rates. The Federal Reserve does not control the mortgage market, the first trust deed mortgage market, but the Federal Reserve controls what's called the federal funds rate, which affects the prime rate, which is what the bank marks up to lend money to you on a home equity line of credit. I believe as of this call, the prime rate right now is 7.25%, and most lenders are going to lend between 1 and 3% above that. I mean, there are probably some deals that are lower, and I know there are deals that are higher, but just to kind of give you a guideline. So if you're borrowing money to build an ADU on a home equity line of credit, what you're getting is a 9 to 10% interest-only payment that can go up or down based on what the Federal Reserve decides to do in any particular month. So you got to be really careful how you use this. It's not a bad product. It's just an adjustable. The majority of these are given to you as 10 years. You make interest-only payments, and after the 10 years, they roll over to a 20-year fully amortized loan. They remain adjustable for the entire time. Cash out refinance. If you have enough equity in your home, the cash out refinance is a good option. Traditionally, they go up to 80% of the current loan to value of your home. They're usually pretty cost effective, and you can get 30-year fixed rate on it. Challenge with that is you're giving up on your low interest rate that you got a couple of years ago. Again, a way to look at that is, what kind of solution is this ADU providing for you? Is it providing income? Can you rent the ADU for $3,000 a month? Well, then it's kind of simple math, right? What's your payment today? How much is it going up? What's the difference between the two? And does it make sense? Sometimes keeping the low interest rate can actually cost you money. So it's something to look at. Not necessarily saying this is the way to go, but this, if you have a lot of equity in your home and you want more security than a home equity line of credit as far as what the monthly payment's going to be, this could be an idea for you. The next loan we're going to talk about is what's called the HomeStyle Renovation. And this is where you have a home, you love it, right? You love the neighborhood, you love the lot, you love the location, the proximity to family, to medical, to shopping, whatever it is your thing is. But it's just not the right house for you. You know, you've gotten married and now you have children. Quadruplets were born. Parents are moving into your home. Children are moving into your home, right? There's a lot of different variables where you just need more space. We can use the HomeStyle Renovation to enlarge your current home or to build an accessory dwelling unit on the lot that you currently have. The couple of benefits of this type of transaction is we're going to lend you a percentage, in this case up to 95% of the completed value. So if your house is worth $700,000 today and will be worth $1 million when you're done, we're going to lend you up to $950,000 of loan amount if you need it. It's a way to be able to finance your construction without having to come up with the cash, because we're going to appraise it at the completed value. We're going to cover any cost of repairs, remodeling, renovation, ADU, energy efficient improvements to your property, pretty much whatever you want to do. Fannie Mae does allow only one additional structure to a lot. The 203K is kind of the HomeStyle Renovation loan, only it's a little simpler as far as qualifying. So if you have a little bit higher debt to income ratios, or you have what we call bruised credit, right? We've all had credit challenges. If you have them right now, you're not alone. There's a gazillion people that have had them at some point in their life. This will allow up to 3 additional units. And again, it'll use the funds to upgrade your home or to basically build an ADU or build multiple ADUs. The one thing I like about the 203K is if you're in a neighborhood, maybe you're over improving the neighborhood, the house for your neighborhood, but you can kind of see that if your neighborhood is growing and in 5 years it's going to be worth something, or you just don't want to move there and you don't really care, it will lend up to 110% of the completed value. So it's definitely something to keep in mind. We don't like going to 110%, probably nor do you. However, the program can in certain situations. Private lending is the quick and easy solution, right? You have a little bit of cash, you have enough cash for part of the improvements, but you don't have enough for all of them. You don't want to go through some of the paperwork that the loans we've talked about previously will put you through. You want to remodel or add an ADU to a non-owner occupied property, and it's just going to be temporary. What you're going to do is remodel the house, add an ADU, and then refinance it into something else, sell it. There's so many things you can do. They're usually pretty quick and easy. They're relatively expensive. They would be on the more expensive side of the lending the graph that I showed you. However, they do provide solutions, and they're usually pretty straightforward. Aging in place, we have a loan product that we call the retirement mortgage. One of the benefits of it is a reverse mortgage. People hear the word reverse mortgage and don't like the term. It kind of has a bad history, some of which it may be deserved, but right now there's a lot of regulation on them. They're much better products than they were 10, 20 years ago. Our family structure has changed in this country. You have baby boomers that are moving in with children because the cost of living is so expensive. In that case, would you want your parents living in the same home as you, or maybe at least with, a couple hundred yards of separation, right, in their own dwelling? But you have children moving in with parents. You have grandchildren moving in with grandparents. There's a lot of different family formations that are happening. So maybe the home you grew up in the last 20 or 30 years is the place you want to stay. You've raised your children there. You had parties, you have memories. You don't want to go into a senior care facility, or you don't want to move into a condo somewhere. You just want to stay put. Maybe your home needs remodeling. Maybe you need to add additional income to your lifestyle. How do you do that? Maybe building an ADU on your property and hiring a professional management company to manage it might be an answer. I don't know what the needs are, but I know that if you have a home that is free and clear or with great equity value, reverse mortgage can be a possibility to help you create income, move family in, provide caregiver housing. There's a lot of different things you can do with it. So just keep it in the back of your mind. The jumbo loan will allow you to build or remodel up to $3 million. So all those loan limits don't apply here. They all go up to $3 million. Only one additional ADU will be allowed on our jumbo program. Qualifying is usually a little more challenging. Just underwriting guidelines are more rigid. It's a great option if you own a piece of land and you want to build a real nice house on it. If you have a real nice house that you want to remodel, add an ADU, and you're in that jumbo world. And here in Southern California, we have a lot of this stuff. Depending on where you are, we use different products for you. There's always stocks, investments, savings. There's margin accounts. There's a lot of things you can do if you have a financial advisor. Discuss these options with the financial advisor. If you have a mortgage planner, maybe have the financial advisor and the mortgage planner talk through it together. You have a whole lot of choices when thinking about an accessory dwelling unit or a remodel of your home. And again, feel free to reach out to us with any questions or for more detail, because you're going to need more detail before making a decision. ADU is built for income. Like we talked about, rents are skyrocketing throughout the country. Providing a 2-bedroom, 2-bath apartment for somebody to live in creates housing. It creates income for you. It could provide for generational living. You have your children and grandchildren maybe living on the same lot as you, or maybe you're moving out of the big house, renting it out, and moving into the small house. There's a lot of different reasons you're building an ADU, but again, we need to solve this housing crisis that we have. So it's definitely a good idea that we take advantage of it if we think we can. It allows you to move out, not relocate. I don't know. I've lived in my home almost 20 years. I'm not sure I want to move into a new neighborhood. I'm not sure I want to move into a new community. I like my doctors. I like my little stores and restaurants I go to. I like proximity to different things I like to do. Maybe you don't want to relocate. Maybe just either downsizing into an ADU or remodeling your home or making it more two-family oriented. There's a lot of different things to think about, but that's one thing to really consider is moving. You can Airbnb the ADU if you decide to, or even the big home, move into the small, whatever you want to do. You can use it as part of a retirement strategy, right? How do you create more income? Do you take Social Security at age 62 instead of age 70? Take it at age 70 instead of 62? Home equity is not taxed on your usage of it, where income is always taxed. So look at that strategy. Maybe that's where your financial advisor comes into play. We're helping create affordable housing. We need affordable housing. So let's try and create it. I hope you enjoyed this short presentation. If you have any questions, please reach out to us. Phone, email, messenger. There's a lot of different ways to communicate. For a phone call on something like this, you can schedule online. Whatever we can do to help you, we're here for you. Thank you very much. Have a good day.